Hello and welcome to our Street View episode for March 2019. Today we're not only going to be talking about the Toronto real estate market, but we've also got a brand new listing in Corktown and our annual scholarship program is back. So it's time to get started. And so we have a brand new listing coming up in Corktown this week, and it is so good. An urban townhome with built-in parking, 3 bedrooms, 3 bathrooms, and you can tell from the photos, it is spectacular. It'll be coming out Wednesday of this week coming up. If you happen to know of someone who's shopping for a great townhome in the core of the city, boy oh boy, this is going to be one of the best ones you'll find this spring. I am super excited to be announcing the return of the RE/MAX Hallmark Scholarship Program. It is by far one of the most popular items that we share with clients in a given year. And if you have a young son or daughter that is planning to attend their first year in post-secondary education for the fall season of 2019, we are accepting applications now. Reach out to me directly and I can help you with the application process. Our team and our clients have been successful 2 years in a row. We've had people apply for the program and have been approved. So mom and dad, if you want some help with tuition this year, reach out to us and we can help make that happen. And now, of course, the Toronto market update. And we're always working off this simple recipe because, you know what, it doesn't need to be more complicated than this. And for anyone who's watching this episode for the first time, there are recurring themes to everything that I share in wanting to create a holistic perspective on what's going on in the Toronto real estate market. Despite all the little bits of news and advice or people's perspective, it can all get kind of jumbled up. And what I like to do is take a bit of a broader perspective, but then on an individual basis, I'm happy to go into a greater level of detail in the applicability to you. And it's when we're speaking to a broad audience, we want to keep it, you know, just big picture thinking. But please know I'm always available to help you understand the applicability to you and how you can take advantage of the opportunities. So that's with a little plug aside, let's talk about the supply side of the equation, which is the number of new listings. And for the month of February 2019, the number of new listings was down 6.2%. And so we can see over on the left side that little orange bar is slightly lower than the yellow bar. So that's comparing year over year. And this chart illustrates the preceding 3 years in advance of this year, which I find is a much better way to look at the market overall. And it also shows you the seasonality curve, right? How things run up in the spring, then taper off in the summer, and then pick up again in the fall. And you'll see that as a recurring shape through each of the slides that I'm going to share with you. And that's the seasonality of the market. So with the number of new listings down, the supply down, the number of active listings, like the total number that are on the market, is around 13,360 listings. And that's pretty much flat. It's almost the exact same number we had in the month of January. So like from January to February, it's essentially flat. The question is, will it change in March? And I think absolutely it will. I know from our own work that we've been waiting for the sleepy winter months to kind of get past and then take advantage of the early spring market. And when you see the price curve, you'll understand why. So the number of sales that are happening, and that's the demand side, so how many people are actually out actively buying homes. And we can see that orange bar is slightly below the yellow one, which represents a 2.4% decrease in the number of sales that have taken place in comparison with the previous year. And you can see that historically that is low. And so once again, it's this idea of the stress tests on mortgages and people stepping away from the process and just maybe a little bit of hesitancy. I will say that the Bank of Canada met this week and decided not to increase the key overnight lending rate, and it's maintaining that rate at 1.75. You maybe heard something about that. The relativity of that is that it influences variable rate mortgages, and that affects affordability. So interest rates staying where they are builds confidence in the market. People's buying budget will not change because if rates were going up, then that puts a downward pressure on price. Right now, things are steady Eddie. So what does that mean? Fewer listings, less sales. What are the results? And that's where it comes back to price. And that is the result. And price on a year-over-year basis is up 1.6% to 780,000. And we can see how that orange bar in this slide representing price is actually getting closer. It's above last year, but it's getting closer to that green bar, which is that benchmark 2017 year. And when we look down the graph there, we can see how last year, where we had the green bar and the yellow bar, there was a convergence in June of last year, meaning where the pricing of 2018 was slowly building and the correction from 2017 was coming down. And you can see for the rest of the year in 2018, price was above the prior year for the entire year. And now coming into this year, that theme is continuing. In both January and February, price has been up just a little smidge. And that is the power of these slides in seeing what's happening longer term. It's not just a year over year example. It's not just a month over month example. It's seeing this longer trend that is the underpinnings of how the market's performing. And so, some more little details. If average price is now at 780,000, what was it in January? Well, it was 748,000. Which means, that's almost a $32,000 jump, or 4.3%. But you can see the seasonality curve. Price always goes up in the spring. And where's peak price? Look at the graph, March and April. And so that's why we talk about the spring market being as strong as it is. It's the culmination of people having that high level of motivation. This is the year you're going to do something. It also ties in with how homes show. They look their best in the springtime. And also there is still this idea that if you sell your home in the spring market, you can get moved 60 days later into summer, and then the kids will be in the right spot to go to school in the fall. And that still is a factor in the spring market. All of those things together, the spring market is always classically the busiest time of the year, and it's getting ready to get started in the month of March. So now, just a final thought on this price convergence. We can see in June there where the green and yellow bar transitioned. And I think with the orange bar, of this year's results starting to perform better, we might see a price convergence a little bit sooner this year. Will it dip into the month of May? Meaning the benchmark price that we're all trying to catch up to. Because there are a lot of people that have owned real estate for a while that they've been saying, I missed the peak if I were going to do something. Well, it just seems to me that the overall peak might still take us another year or so to get back up to that level, realistically. But we're pretty darn close, and the market is about as balanced as we've ever seen it. And I was mentioning to a client the other day, this is probably one of the most stable markets I've been in my now almost 12-year career. It is. So one of our favorite charts is the sales and average price by major home type. And allow me to explain how this chart works. It's broken into a top half and a bottom half. The top half is sales and average price in specific numbers, and then the bottom half gives us the year-over-year comparison by a percentage. So as an example, and you can see how it's split into the 416 and the 905, we're going to come across to the 416 average price, and we look at a semi-detached home, $1,087,000. And then we come down to the lower box, we can see how the year-over-year percentage change, 10.5%, meaning that the price of a semi-detached home in 1 year has gone up 10.5%. Then similarly, we go back up to the condo apartment, $612,000, it's gone up 7.4%. And we can see that in specifics, when we look at the difference between those two values, it's like the spread between the two of them. It represents an interesting dynamic in the marketplace. This is classically the move up buy. If you own a condo as your first property and you aspire to own a 3-bedroom family home, a semi-detached is typically what you'd like to move up to next, at least inside the Toronto area in the 416. And this is why it's seeing so much demand. But the difference in price there is $465,000. So it's a fairly significant jump. But how does that compare with last year at this time? Last year, the spread was only $415,000. And so you say, okay, well, what's making up the difference is that semi-detached homes are climbing faster in price right now than condos. And that's interesting because most of 2018, we would have said the inverse of that was happening. And as a matter of fact, for anybody who's a regular of this program, will recall back in May and June, we talked about that spread being actually below 400,000. And it was the tightest spread that I'd seen in a very, very long time. And so I think for a lot of folks that, you kind of ignore all the other noise in the market and you focus on the applicability to you, you find opportunity amongst all the noise is what I'm saying. Right now, yeah, the jump is a little more significant, and I would say that condo pricing overall is starting to soften a little bit, meaning like the pricing is kind of capped out a little bit. It's gotten to a stage now where first-time home buyers have been so disadvantaged with price and with the mortgage stress testing that condo pricing can't grow necessarily at the same pace it has been. But for those that have saved some money and built equity in that little condo they've owned, they are able to make the jump up to a semi-detached, and they're driving the market in that regard. So that's very interesting. And we can see correspondingly a detached home is only up 0.8% because at $1,295,000, it represents a very smaller segment of the buying market. And this next slide is going to really shed some light on that. I'm particularly excited to show it to you because this is a part of the conversations I have with many individual clients about how the market impacts them specifically. And so this is obviously sales price by price range and house type. This will be really insightful for us to see how we have all the various price ranges over there on the left-hand side, and then we have the different home types. So starting with detached, we can see that the greatest number of sales happening is between 600,000 and 900,000, right? You can see how those are the top numbers in terms of volume that are trading for detached homes. And then the next column over in semi-detached, that price range is actually a little bit lower. It's from 500,000 up to 800,000, understandably. And then if we slide over to townhouses, it's very tightly compressed between 500 and 700,000. But then if we come over to condo apartment, we can see that the greatest volume is happening between 300 to 600,000. And remember, this is for the greater Toronto area. So when we get outside of the core of Toronto, the 416, there is great affordability in condo. There is. And we can see that there are actually 11 sales that happen between 100 and 200,000. And it's like they're out there. You can find them. And I love that about this chart is that it illustrates that there is something for everyone. And so when people talk about, I just can't afford that. I can't, the market is too hard. It's too expensive. And it is expensive, but it's always been this way. And the key is to go and find the house type that you can afford. And I love this chart for that because it inspires hope that you can make it happen. And getting on that first rung of the ladder is the key. Once you're there, you can build equity and be a part of the growth that's happening inside this wonderful city that we live in. So anyhow, that's my little inspiration speech. But anyhow, I'll get off the soapbox and get back to the data. And what I also like is to look at how the market is comprised. Detached as a home type makes up 43% of the market. You can see that down at the bottom. Semi-detached is only 8.8%, while condos is almost 31%. And that's for the greater Toronto area. And I'll bet you if we looked at the 416, condo would be a much higher percentage and semi-detached would be a much higher percentage, obviously because of the home type. So I think that's very insightful. And then the last thing I'll point out to you in that detached column in the bottom left-hand corner, that there were 165 sales so far this year of homes over 2 million. So there are obviously some transactions going on in that sphere as well, which demonstrates activity at all levels. So I think this is a really insightful slide. So with that, I'll leave it at that. Hey, and I would also say we are at the threshold of the spring market, and Madeline and I are still accepting new clients. So if you're contemplating making a move in 2019, you should speak to us now, and we can get you set for success and help you make the best move you've ever made for 2019. So with that, I'm Matt Emerson. I trust you've enjoyed this. And as always, I look forward to engaging with many of you on a one-to-one basis because that's the work that we love to do. And until next time, I'm Matt Emerson of RE/MAX Hallmark, Emerson Group Realty. Have a wonderful March.